All right, you're welcome to La Prinzo World Academy. My name is Prince Ikilowe. In this training, I'm going to teach you how to trade Forex from ABCD. I call it the ABCD of Forex. You're going to learn how to place trade. You're going to learn how to actually analyze the market. First of all, I'm going to teach you the basics of Forex, ABCD of Forex, what is Forex, and the things you need to know about Forex. I'm going to place a trade for you to see. All right. Before I'll place a trade, I'll look at the market and analyze the market for you to see. And then I'm going to place a trade actually. Okay. So let's get started. Let's get started. If you're new to this channel, if you're watching this video on YouTube and you're new, please subscribe to this channel because this channel is all about Forex and crypto. Okay. So what is Forex? What is Forex? Forex is a short form of foreign exchange. It's foreign exchange. You're exchanging one currency pair to get another. For instance, you are traveling out of the country. Let's say I'm doing this video. I'm here talking to you from Nigeria. Let's say I'm going to UK or maybe United States of America. I can't go to America with my own currency. I need to exchange my currency with the United States dollar. So that transaction that takes place is what is called Forex. It's foreign exchange. All right. So that's Forex for you. So now, what are the major currency pairs? What you're seeing on the screen, you may have to screenshot it if you have to, but don't worry, because you may have to screenshot it, of course. These are major currency pairs. We have the Euro USD, Eurozone, United States. We have the USD JPY, United States, Japanese. These are the major currency pair. Like for the Euro, you call Euro dollar. These are nicknames for the dollar. The USD JPY, it is called a dollar yen. Pound is called pound dollar. So you may just have to take a screenshot of it. So these are the major currency pairs. Now, you don't have to trade all of them. You don't have to trade all of them. You just have to focus your attention on one or two. For me, I like USD, GBP USD, this pound dollar, all right? So when I'm trading Forex, I'm trading just these two, this particular pair. You don't have to trade all these pairs randomly. No, that's the mistake most people make. Most people thought the best is to trade all the currency pairs. No, focus on one currency pair and trade it and master it. That's where your wealth is. So it can take a screenshot, but you must not trade all of them. We also have the minor currency pairs. These ones are also, you can trade them as well. They are good, but the best ones to trade that, they have liquidity of more volume is the ones the majors have more volume, they have more liquidity. That is what you want to focus on. But these ones are also good. All right, we also have the exotic currency pairs are also, in fact, these ones you don't have to trade them. You don't have to trade them. You have to trade the majors or the minors. All right, the major and the minors are the best for you to trade as a Forex trader. Like I said before, you don't have to trade all of them. Now, what are brokers? A broker is a financial intermediary or a company that facilitates currency trading in the foreign exchange market. They provide a platform and services that allow traders to buy and sell currency. Forex brokers offer access to the interbank market, where the major banks and financial institutions trade currencies. Now, if you are a trader, you don't have a good broker. We have so many fake brokers in the house. So if you're watching this video, please, below this video, you will see one of the best brokers in the world that use today. So brokers, they are just like the bank. You cannot trade the market without the help or without a broker. You must have a broker and deposit the money in the broker's account, and then the broker will not connect you to the Forex market. That's how it works. So you must have a broker. So if you have not created an account before this video, now below this video, you're going to see a link for you to create your Forex account and start trading Forex with one of my best recommended brokers in the world. Now we have base and code currency. What you're seeing, this is the base currency. All right. Why this is the code currency. Now, look at how it was. I'm going to show you on the real chart. I'm going to show you on the real chart. If you look at this market, if you look at this, these two currencies, this is Euro USD. Now, if I feel that the Euro is going to go up, all right, if I feel that the Euro is going to go up, it means I'll place a buy. And then if indeed the euro dollar, if the euro goes up in value, all right, I make profit. Now the same thing, if I feel that the US dollar is going to be going down, I place a sell. All right, I'm selling off, I'm buying this one here. So you're not really taking anything, holding in monetary currency yourself, but you are predicting market. We predict the movement of the market. Is it going to buy or sell? And if our predictions are right, we'll make profit from the forex market. That's exactly how it works. And before you predict the market, you must know when to buy and when to sell. You don't just go to the market and start placing buy or sell. You must go through training. That's why you have to watch the videos on this channel. That's why you have to be in this academy to learn how to trade the forex market professionally, because you must know when to buy. The reason why most people fail in the forex market is because they have not really learned how to trade professionally. You see, this is the normal candlestick. What you're seeing on the screen, they are called candlesticks. These are called candlesticks. Red and green, this one's, the red shows that the price is actually coming down, while the green ones indicate, it means that the price is actually going up. All right. So let's go. Now in the real chart, this is how it looks like. In the real chart, this is how it looks like. You're seeing, this is the chart on currency pairs. You see these ones here, candlesticks. You place buy. If you place a sell from here, for instance, where my cursor is, if I place a sell, if price comes down, indeed, I am going to make profit. But if price didn't go down as expected, I'm going to make losses. That's why it is good for you to use stop loss. All right. I'm going to, maybe if there's time, if time permits, because I don't want this training to be too long, you're going to have, I'll show you how to, of course, use stop loss. All right. So we also have what is a PIP, in Forex, foreign exchange trading. A PIP stands for percentage in point or price interest point. It is a unit of measurement used to express the change in value between two currencies in a currency pair. PIPs are typically used to measure price movements, and they represent the smallest price increment that can occur in the exchange rate of a currency pair. So they are measurement. You use PIP to measure the movement. For instance, now this is Euro USD. If price of Euro USD is 1.14988 now, all right, and the next minute it moves to 1.1499, it means that the price has moved with 1 pip. Price has gone up with 1 pip. That's how the pip, actually the meaning of pip. Okay, so what's the loss side? Now in trading, loss size will determine whether you're going to lose or not. The loss size you're using in forex trading, a loss size refers to the standardized size of a transaction. It represents a specific quantity of a currency pair that you are buying or selling. The lot size you choose has a significant impact on the size of your position and the potential profit or loss in the trade. I'm going to show you with my phone, if time permits, how the lot size, the different lot sizes you use matters a lot. That's why in trading, you need to use proper risk management. So you must understand this, that the lot size, most people say, I lost thousands of dollars in Forex. How did you lose thousands of dollars? It is because you are not using the right lot size. Perhaps your account is small and you are taking too much position. Your lot size is not correct. So lot size will make you lose money and can also make you become overnight success. You can become a millionaire a day if lot size favors you, but if it goes against you, you can also become a poor man. All your money gone because of lot sizes. Now we have standard lot size that is 100,000 unit, which is one. Those I'm going to show you on my phone as well. Now we also have the mini lot size, which is 10,000 unit. Is like this on the MetaTrader 4, which is $10, $1 per pip. It means that if you move in one pip, you make $1. All right. We also have micro lot size, which is like this, 1,000 unit, and it's written 0.01. It's 10 cents per pip. So these are this nano lot size. We don't need to add it because it's not what most brokers offer. They only use for now standard lot, mini lot, and micro lot sizes. All right. So what are the best time for you to trade Forex? Very, very important question. What's the best time for you to trade Forex? For me, the best time is London, New York. But we have Asia section, we have London section, we have New York, we have Asia. So the best time to trade is, for me, this Asia section usually start from 12. Now, right? I start from 12. That's the Asia section. The best time is London session. That's 8 o'clock, 9 a.m. in the morning or so, 8 o'clock London time. 8 o'clock London time. I think for Nigeria is same 9 o'clock or so, if I'm not mistaken. So the best time is London time. That is when you see the London, anything that has to do with pound, GBP, USD, GBP, all those GBP, JPY, all those currency pairs, they are going to be moving in volume. And the best time to trade is when market is just opening. That early morning, go to your chart, start looking at the market from, if you are trading the London session, look at their chart from, let's say, from 7 a.m. you're already on the table. You have taken your bath, or I mean, you've taken you've brushed your mouth, whatever you're doing, wake up that early morning, you're trading London session, look at your chart and see what to trade. If you're a day trader, whatever you're doing, you must trade, open your chart at that 7 a.m., seeing how the market can move from 8 o'clock as London time, 8 o'clock market opens, 10, 11, 12. All right, market will be slowing down. 1 o'clock New York session opens. So London and New York session is the best time to trade. London, New York, the best time to trade. All right, so ladies and gentlemen, this is the basis of Forex. I'm going to, of course, show you how you can place trade. So maybe I'm going to log into my phone to let me share my phone screen. I'm going to share, because I'm going to play with demo account. So if you have not created an account, you can create an account tonight with demo account. You can start trading with demo account. So for the purpose of those of us who are still new, I am going to place a trade because some persons are still new on Forex. So I don't know if you can see my screen. What you're seeing is the demo account. So if I click on the plus sign up here, this is buy or sell. I'm using an Apple phone, but it may look different on Android. So we have Euro USD, GBP USD. So if you want to add more currency, if you look at it yet, we don't have much currency. We just about 7 or 8 or so. So if you want to add more currency, you click on the plus sign. All right, you click on Forex. You see all of them here. So I'm going to add maybe GBP, JPY. So if I click on the plus, I don't know how it may. If on Android, it's not like this. This is iPhone, so it's different from the way it is on Android. So if you're using Android, it may look different, but you just have to click on this plus sign. If you're using an iPhone, it will disappear. So this is how you can add, let's say these ones are, this is how you can add currency pairs that are not showing by default. So for you to place a trade, you just click and hold. All right, click, press and hold. It's the same thing with Android. This is iPhone, but the same thing with Android user too. You click trade. Once you click trade, you're seeing buy or sell. Now this, you're seeing what you're seeing here, that is for a micro lot, 0.01. I showed you on the phone already on the slide. This is 10 cents per pip for micro. So if I want to buy I click buy Euro USDC. It's showing me immediately. I'm seeing red. It means that market, I'm in loss. Remember, the market closes every Sunday. I mean, it's Friday. Friday market closes, Sunday evening market open. So I'm going to use the same trade. I'm going to use a different loss size, Euro USD. So I press and hold, trade. This time around, I'm going to use standard loss size. So I'm going to change this to $10 per pip. So I'm going to type 1.00. This is standard loss size. It means that if the trade goes in my direction, for instance, I'm going to buy. If trade goes my direction, I'm going to make $10 per pip. The same market, the same buy. So you see that one is going to give me quick money or quick losses, but the same trade. So this is where the problem is. When you are trading any market, be very sure of what you're doing. Be very sure of what you're doing. So the lot size is where the problem is. Let me show the maybe AUD trade. So I'm going to sell now. Remember, I am not doing any analysis with what I'm doing right now. I am not doing any analysis. I'm just guessing. But in a real sense, you are going to do analysis before you start trading. Nobody just start trading without doing analysis. So I'm going to show you how I analyze the market, how to analyze the market, and how to place a trade after analyzing the market. So this one I'm doing here, you can see that I'm already in loss. I'm already in loss with this particular trade because of what? I did not do any analysis. It's a guesswork, and that's how most people trade. That's why you see somebody say, I lose money in my account. I blew my account, and all the rest is because of they don't have this knowledge on how to analyze the market. So I'm going to switch over to my laptop and see how we can analyze this market together. See how we can analyze. I'll show you how in a few minutes. I'm going to show you how we are going to analyze the market before we actually place a trade. So what I did with the phone right now is just a guesswork, but I really want to show you how it works. This is because we have some people who are new who are watching the video. So now let me go to the Forex, to my laptop, and show you how you are going to analyze the market before you press buy or sell. So let's go to the market. All right, can you guys? I'm sure my phone, my screen is showing. Please, if you can see the screen very clearly, you can see the phone screen, I mean the laptop screen, can you type 111? I'm going to show you how to analyze the market, how to analyze market before you place a trade. Let us learn it's called technical analysis. Now we have types of analysis. We have types of analysis. Okay, good. We have types of analysis. We have technical analysis, and then we also have fundamental analysis. Types of analysis: technical and fundamental. Fundamental is when you trade with news. So let me show you one website that you need to know before you place a trade. Any trade you want to trade for it. This is not for people who are trading indices. If you are trading indices, this one is not for you. But for Forex trading, you have to come here and look for type forexfactory.com. Forexfactory.com. Before you place any trade, you must come to this particular website, forexfactory.com. All right. Now you are going to come here and filter this particular all these things here. So let us You don't have to create an account. Just come here and you will see all these things. So you click here, filter. You click on filter. Now, I want only high impact. If you look at it, if I put my cursor here, it's high impact expected. So it's only news that are high impact that I want to fill. This one is medium impact. So I'm going to unclick this. I'm going to unclick this. I'm going to unclick this. And I'm going to, like I said before, you don't have to trade all the currencies. You just have to focus on one or two currency and master them. So because I'm trading only Euro USD, Euro GBP USD, I'm going to unclick all these ones. I'm going to unclick all these ones. So I want news that will show me only about USD and GBP. So what it means is that before you place any trade, you need to come here and do this, all right, so that you will not be caught up if there is a news coming. So you click here, you come here, you click calendar. You see? Make sure you click on this time. You change this to your time zone, your own time zone. So what this is West Africa. If you're not in Nigeria, you can click here and it will show you every other time zone. So there is the time zone is correct. So it's going to show you Nigeria time. Whenever there is a news coming up, it's going to show you the Nigeria time of the news, the Nigeria time, you know. But it's the filter. Are you sure it has not? It has not worked. I'm going to click on only high impact and only Euro USD, only GBP and United States dollar. This is how you trade. Before you place any trade, don't just place a trade. Make sure you come here and you do all these things. You click apply filter. Let's see. Okay, it has worked. So I've set the time zone. Look at there. I click on my time. If you're using a mobile phone, the same thing. Make sure you click the time action icon and let it be on your own time zone. And also filter. If you are trading more than one currency pair, make sure you filter all of them, but make sure it is only on high impact news. Like now, today is Tuesday. There was a news, durable goods orders. This is a news. So you click here and you read about the news. All right. You read about the news before the time. If a trade is already going on, make sure that you leave the market before. This was 2:30 p.m. If you have a trade going on, all right, maybe USD GBP or GBP USD, you have to leave the market before the time of the news. That's what it means. So that's for fundamental. Now, this is the technical aspect of it. Let's see how we are going to draw our lines. So before you place any trade, you need to draw your lines. So okay, so this is trading view. You may have to also learn how to use trading view. If you are trading indices, it's good. So I'm going to remove all these things and do so I'm going to remove all of them. Move all indicators. So now I don't have an indicator. Now this is pure price action strategy on how to trade. You can use this to trade in the market, even indices. I'm going to show you. It works for Forex and it works for indices. But now let me show you for Forex first. Then maybe if there's time, I'll see show you for. So I'm going to analyze GBP USD. Okay. Now again, I'm going to remove all the indicators. Now there's no indicator again. It's only all right. So the chart is empty. It is called naked Forex or trading without indicators. Indicators lag. So the best thing to use is just trading without indicators. So the first thing you want to do is to go to your month. This is for Forex, but if you're trading indices, you need to start to maybe indices to maybe weekly if the indices had been there for some time. But for Forex, you need to start with the monthly analysis. In the monthly, now what I'm going to do is to map out this place that price has touched and bounced back. I call them zones where we can place our trades. These are points. These are points where price may likely react because they are very important turning points. So you're going to map them out first. I'll lock it. It's called, this analysis I'm doing is called top-down analysis, meaning you take from the higher time frame. So this is, again, these are places where people may have interest. So if price is here, it means that price is going to react when price get to these places. So it's very important you map out these places with higher time frame. Now I'm using the multi time frame. So I've seen these two places. This is where. So imagine if you were watching the price getting to this point, what you need to do is to think about selling. All right. If you place a sell here, let me just show you how the sell would have worked. You place a sell here. Let me drag my cursor down here. This is about 2,279 pips movement, about 15% decline. That was what? That was March 2018, March 1st, 2018. Again, price got to this point again in July 2021. Price still did the same thing. All right. Look at here again. The same thing. This was March, Monday, 2nd January 2027. Price got to this point and it moved all the way up. It came down here. All right. This is Thursday, 1st August 2019. Price moved high before coming down to retest the zone before moving to that same zone that it respected earlier. So you need to take higher time frame. Now look at what price has done. It came all the way down here. As at October last year, Monday, October last year, it came all the way down here and it broke through this zone and came back for a retest. You see the retest now? So it means that this place, these two zones I have drawn, they are powerful places you need to take note of. So once you take note of those zones, you want to place trade only when price is approaching this zone. So let me, this again is another zone. All right. So for those of us who are still new, what I'm doing is I'm drawing zone. It is called support and resistance or supply and demand zone. This place is where you are supposed to sell. Like here, it's another zone. This is a major zone, but this is also another zone. Yeah, very important. All right. So now I've drawn it with monthly. Let me go to weekly and also draw it with weekly time frame. Now look at it here. Even with the weekly time frame, is respecting these zones. You see, these are places you need to take note of, right? Right, like here now. This was October 16, 2023. Price got to this point. It was on a monthly time frame, remember? All right. Now, price is approaching this place again. So we can also draw our trend lines. For instance, you can use trend line to also track the movement of this particular market. All right. Trend line, we use trend line and also horizontal lines to draw these lines, this particular. The market is on our trend. So this is the concept I'm using right now is pure support and resistance levels. Support and resistance levels. So now the market is an uptrend has formed in according to the weekly time frame. An uptrend has formed, and where it is right now is the best place to buy. Where this market is right now, so you don't have to you don't have to take trade with the daily time frame. I mean weekly time frame. You can go back to daily to see the validity of your trade. Now this is the daily time frame. All right, price has been doing higher high and higher lows. When anytime you see price do higher high and higher low, it is called uptrend. When price do like this, 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 this is called an uptrend. All right, we have uptrend and we have downtrend. When price do like this, do like this, do like this, do like this. This is called a downtrend, higher high and higher lows. It is called a downtrend. So for now, the Euro USD, the GBP USD has given us an uptrend formation because it's already, according to the weekly time frame, it's giving us, let me remove all the drawing. First thing you need to know is, as you open your chart, look at your chart with a higher time frame. Is this market an uptrend or a downtrend? A downtrend, let me explain again, is when price makes series of lower lows and lower highs. An uptrend is when price makes series of lower lows and lower highs. For instance, a downtrend is when price makes series of lower lows and lower highs. This is a downtrend, but you want to determine an uptrend with a higher time frame. Look at it here. This market has formed an uptrend according to the 1 week time frame, and where the price is right now is on our trend line. All right, but I don't want to confuse you. Maybe you are new to trading with trend line now. Let me focus on mapping out support and resistance. So let me delete this particular trend line, and let's use let me show you, let's see if we can see another zone right within this area. We don't want to go and draw lines everywhere in the chart. Let's see if we can see another zone to draw our lines, and where you want to draw take trade is only when price approach those zones that you've drawn, right? So let me see, this is daily time frame. Let me see, anytime you see price do like this, put your cursor there. This seems to be a zone. How do I know? How do I know? Because price has touched here, all right? Price has touched here severally. It has been struggling here. It's a strong resistance zone. Strong one, yeah. Look at in the past. So let's go back for you to know if this is a zone. History in the past will tell you if this is actually a zone. Let's go back. There was a time price got here, price got rejected. All right, this was July 2020, price got rejected. So it's a zone. It's a zone. So what do you do when you see price is on a resistance zone? For beginners in this, as you think about selling. If somebody has sold this market here, let me say when you were watching this market approaching this zone, if price, the day price got to this zone, somebody sold. Let's see how much the person would have made before the price started coming down. Somebody would have made about 275 pips before price is not gradually coming to that zone. So you have to think about selling when price is on a zone like this until it breaks through this zone. If it breaks through this zone, what will you do? You allow the price to break through here and come back for a retest. All right? Then you see a buy signal, maybe a candlestick formation. It will now give you an opportunity to enter and ride the market to this side. But for now, we are expecting this price to break through this. So this Euro, GBP, USD. You can do this with any market. So we have seen that the market is an uptrend. GBP USD is on an uptrend according to weekly time frame. According to weekly time frame, is an uptrend. So we need to look for buy opportunities. Buy opportunities, buy opportunities. But when you see price on a zone like this, you can quickly take some money before the buy continues. So that's how it works. This is pure price action trading. I'm going to show you how this works with also indices. Maybe somebody may be thinking, maybe it's because it's Forex. No, this is not because it's Forex. So I'm going to do this with also volatility indices. That's also another trading that I love so much that is offered by Deriv. So let me show you how it works. It's indices. It works with every market. knowing how to draw these zones work with every market. If you just master how to draw your supply and demand zones, aka support and resistance, that means you have passed 50% of your journey in Forex. If you learn how to draw support and resistance zones, you've passed 50% of your journey in Forex or trading in general. So let me show you how it works. I'm going to remove all these indicators. All right, so this is the price for, this is indices, volatility 25x, volatility 25x. I'm going to, let me start in 1 hour, weekly time frame. Of course, okay, it doesn't have much history, but still I can see where this was a zone. So what am I supposed to do when price approach here? I sell, I place sell. I don't trade except price is on a zone. Mark this what I'm saying. You don't press buy or a sell until you see that the market is on a zone. On a zone before you place. This is a zone, of course. I'm using weekly time frame. You can add the week. When you're drawing support and resistance, always add the week. So it is not a straight line, but a zone. All right. So these are the zones that we have here. Now you can see that even with daily, it's clear that this market has been respecting this particular zone, and even here it has been respecting this particular zone. So what do? If price approach, like here, this was a fake out. If you have been watching this market when it was coming down here, all what you need to do is to watch out the price, watch that price get to this point. Don't trade here. This side you can sell if you want to, but that selling too, you have to draw your trend line to ensure that the market respect your trend line. All right. These are things I use to combine trend line and then support and resistance. When you combine all of them together, it was. All right. But for the purpose of this training, we are doing only drawing zones. So you draw with higher time frame. Like now, if you were watching the market where it was coming here, you would have bought. This is another chance to buy to here near the zone. This is where the market came down. At a point, price got here, but it got rejected. So support can become resistance. Look at here it was also resistance, but here it became a support. Resistance can become support as well. You see, it got here, it got rejected, got here, it got rejected. So your own is just to master how, look at here, price got here. This is what you call double top, the bottom, double bottom. It gave us a double bottom and it went all the way up. So what I'm teaching here is learn to map up this zone with higher time frame. Look at all of them here. These are zones with higher time frames. These are zones with higher time frames. Once you map out these time frames with these higher time frames, you trade only when price is on zone. Don't trade except price is on a zone. How many of you get what I'm saying? If you get what I'm saying, can you type 222? How many of you are getting what I'm saying? You only trade when price is on a zone. Like all these other places, they are a no-go area. This is where you trade. This, yeah. This is sell opportunity. This is buy opportunity. If you want to trade a breakout, if price breaks out, allow it to come back and have a retest. All right? Then you trade. You see a candlestick formation, you buy. So from today, you need to know how to place your trade, look out for zones with higher time frame. Let's see if this is a zone. Let's just find out. Let's find out if this is a zone. Sometimes there are what they call minor zone, but this seems to be a zone. This was a fake out. It was a fake out, a fake breakout. So let's see if That place is a zone for you to confirm it. You go all the way back. The back history. So I'm not sure of that place as a zone because I can't see good history, because anywhere there is a zone, price will react very, very strongly. Let's look at 4 hours time frame. This place is a zone, you see. This is a zone, very strong zone. You see, price got here, but it got rejected. It's a strong zone. So you look for opportunities to buy or sell on those strong zones. Let's see if here is also a zone according to the 4 hours time frame. Because it is only on a zone that price can struggle for some time. So let's see. Okay, that place is actually a zone. That place is actually a zone. It's actually a zone. That's why I think price is struggling here. Anytime price get to this point, because there are a lot of buyers, a lot of sellers are waiting here. That's why I see price is struggling here. So until it breaks through this zone, we cannot buy. For now, we are going to hold on with our buys, though it looks like an uptrend. The market is an uptrend, of course, with the trend line as well is an uptrend, but we need to allow the market to break through this particular zone, all right, come back and retest this our trend line, then we know that we are in for a buy. All right, so guys, I hope this video helps you. I hope you understand the concept of trading. I started trading from the beginning, A, B, C, D, what is Forex, to this advanced level where I showed you the concept of support and resistance, how support and resistance can help you trade on the right spot, because trading is not all about, it's not just all about placing a trade. You see candlestick going up, you buy. No, it's about the right spot to place your trade. So these zones, you see, it works with Forex. Now I'm giving the example with even indices. It works with Forex, it works with indices, including using trend lines to map out the strong zones for you to place your trade. I hope this video helps you. If you are new to my YouTube channel, please subscribe to the channel. For those of you who are watching this video on the channel, for those of you who are with me in this webinar, I want to believe that you've learned something tonight. All right, we have our VIP session, our VIP training. So for those of you who want to continue making money from this Forex, we have the VIP. You can join La Prinzo World Academy. All right, the videos are already there. You come here and you see all the videos here. You're going to learn different strategy. All the courses are here. You start with mindset development. This way you program your mind for success. Believe in mindset. You see Forex Master, what is Forex? You see how to create your trading account. You see everything in all these things I've explained in 1 hour, but here you're going to see everything. You also get PDF books, all right? If you come here, you see PDFs. Okay, you see book, download these books. You see Naked Forex, Ultimate Guide to Price Action Trading, see books, How to Trade, Secret of Volatility Index Trading. These are all the Candlestick Bible. These are books you read to master the skill. You also have crypto trading skills. These are for crypto, because the academy is all about Forex and crypto. So guys, for those of you who have interest in the VIP, you can chat me up immediately after this webinar. I'm going to show you how you can come in. If you're watching this video from YouTube, you can join the Telegram group. The link to the Telegram is there on the Telegram group. You can get me. My WhatsApp number also going to be on this video. So guys, I hope this has helped you. I'll see you in my next video. I'll see you in my next training. Thank you for your time. Thank you for watching. Thank you for those of you who attended this webinar. Bye for now.